This panel, ladies and gentlemen, is about the day after tomorrow. So not today, not tomorrow, it's the day after tomorrow. Actually, it's beyond 2030. I don't know why 2030 was selected as a date, but it is interesting. I hope I will still be around by that time. But let me first present the panel members. To my right-hand side, Governor Dirk Kempthorne, who very well known to most of us, Global Federation of Insurance Association and American Council of Life Insurers. Welcome, Dirk.
Carl.
Then we have Maarten Edixhoven, Aegon Nederland, and Eric Lombard, Generali Assicurazioni and Chairman of Europe Assistance. Welcome, gentlemen, to discuss the crystal ball. Let's look into the future. Maarten, what technological development do you think will bring the biggest change in the next 15, 20 years to come?
Yeah, thank you, Karel. Excellent question. Although my head is still with the discussion on the pets and.
You have a dog or a cat?
I have 3 young boys, which are kind of dogs. And,
that's even worse.
And we just had a whole debate on whether we will place the goldfish with with 2 dogs actually. And I think after this discussion we will keep back a bit from that. But going back forward and looking at our crystal ball here in the middle of us. 2030 is a long way ahead of us. From my personal perspective, I think we all have, since 2007, a supercomputer in our pocket and using it every minute. So we have seen exponential growth of various technologies since then. We have also seen, especially in our industry, I think, since 2007, the financial crisis, exponential growth of regulation. I think those are the 2 biggest impacts next to the interest environment on our industry. From my view, I think there are 2 aspects very important. I think if you look at 2030, I think especially, and we are basically a life insurer, but blockchain and genetics are extremely important new technologies. I think blockchain, basically our business is, we are becoming IT companies. And basically our business is about data and contracts. And now blockchain is also about data and contracts. And doing that in a much smarter way, in a much also I would say safer way than we can do as individual companies. So as Aegon we are together with a couple of other insurers in a global initiative to look at blockchain. And the first application seems to be in reinsurance. In the Netherlands we are also applying blockchain now towards term insurance. As a way to reduce cost, but also to reduce fraud. So I think there are huge benefits for the industry in there. Genetics, you were talking about the customers. I think genetics and the enormous decline of the cost of DNA sequencing over the last 10, 15 years is causing a transfer of power from companies with actuarial knowledge and towards consumers, who will know more about themselves, who will be connected to all kinds of devices and health systems. And that will have huge impact on both longevity, but also in the balance of power with the consumer. Not necessarily a bad thing, but I think a very important development. So those 2 I would pick out. Having said that, I think the convergence of all those different technologies, combined with the increasing computer power, will be the biggest effect we will see.
Okay, that's interesting. Eric, what kind of business lines will be new in the future, and what kind of business lines will cease to exist as part of this technological disruption?
Well, maybe a business line will disappear, which is an important one for our industry, which is motor insurance.
Will disappear?
Yeah, because if there are connected cars on connected roads, all that driven by mega computers, totally automated, with 1 accident every 2 million trips, I mean, it will not disappear, but the cost will go down materially, because hopefully there will be much less accidents and much less body injuries, which is the heavy part of it. And so that's significant. There is another part that will change probably a lot, and I come back to the genetics that Maarten was referring to. And if you allow me, I will mention a personal thing that occurred to me. I've been asked to go to a doctor to make a test on a specific cancer, and it was a genetic analysis. And then the doctor came to me and said, okay, for this specific cancer, well, there is the first type that genetically you cannot have, because if you had it, you would be dead already. Okay, thank you. And the second, you would not be dead already, but 5 years down the road, according to your age. But you don't have it, good news. And then the genetic, I think, raises two types of questions. First, if a doctor can have a vision of what will occur to you, should he share it with you? My view is probably not, because if you tell to someone you're going to die at 30, I mean, that's not a life, in my view. So secrecy probably should be decided by the politician, by the society. But also there is the same impact on health insurance. If we insure people knowing exactly what is the risk, it's no more insurance. Insurance is pooling of risks. So for a business like health insurance, I believe our industry should prevent itself of using those type of data to make sure that there's a pooling of risk. And someone having a high risk of dread disease would be covered for the same price as someone being in a very good shape, because otherwise insurance industry will simply disappear.
Would you agree with that, Dirk? That what do you consider the expectation of the consumers from insurers?
That they continually see value added. All of this technology, I think it's very important for this industry to not be on a collision course with technology. Yeah. Very good points made about genomic sequencing. So last year, I joined 10 of our member CEOs. We went to San Diego to the Human Longevity Institute, Dr. Craig Venter's institute, the gentleman who discovered genomic sequencing. The idea being, yes, there's more information, but the insurance companies do not have that. But what if an insurance company provided a rider so that if you have that insurance policy, you could then have some opportunity to have your own genomic sequencing, which is a map, and it could identify certain things, because we really are in the business of people living. Pete Schaefer, who's the chairman of our board of directors and with Hanover Re, but he said he'd love to go to some event someday where somebody says, because of my life insurance policy, my life was extended, life assurance. I think that's very positive. When you talk about the cancers, Eric, many young people today, on the birth of their child, are having a small portion of the umbilical cord cryogenetically frozen, because that is your bio savings bond. All of your stem cells that are in your body are now in that specimen, and for the next 25 years, that may be part of your solution. What if that was part of a rider with a life insurance policy? So I think we need not be on collision. Certainly adapt, be aware. I saw recently, I ride my bicycle a lot. I was looking for some bike equipment, and here came a link. Would you like life insurance because you're a biker? I just thought it was interest.
Yes, my answer would be yes, because it's very dangerous to drive a bike today.
It is. But as Peter Diamandis has said, the Project X creator, you will have people self-select. I went to the link, received a phone call, and the interesting thing was, yes, they wanted to know how many miles a week or kilometers do you ride? Do you happen to use any of the apps? Yes, Strava, because for bikers, hikers, joggers, you may use Strava, which is a record of where I went, how many miles. They said, if you could give us a link to your Strava account, that's an affirmation that you are indeed an active biker, which suggests you're healthier than a lot of other people that are sitting watching television. So I think that this innovation and creativity, one final point if I may make, because I do think we have to talk about the role of the policymakers and the regulators. I really commend the National Association of Insurance Commissioners, Ted Nickel, who is the president this year, but they now have a big data work group and an innovation technology task force. So they, as regulators, want to understand this brave new world. And so they're doing it so that when we sit down, it's not foreign. We're talking a similar language.
Yes, but the three of you have been talking about important data, facts to be available. I'm just asking you a question. Do you believe consumers can handle the knowledge of these data? You know, if they become available, you know, as you were saying, you want to pool the risks. You know I have a higher risk than other people. I know it because through the whatever data dissemination. Can people handle all these things? Are we not asking people too much?
It's first of all, I really like Dirk comments about that we should not be on a collision course with technology. I think one of our great opportunities as an industry is to partner with and do that more and more and more. Also in terms of which is a different topic, but getting new talents into our industry with different competencies. But going back to your question, I think that to a large extent, and we're talking 2030 here, consumers will have that done by computers. They will do, to a large extent, the data analysis, and really fine-tune, and I think that's a great opportunity actually, on an individual level, whether that's in the not existing car insurance business anymore, or in, for example, life cycles when we talk about retirement plans. They can be really made at an individual level, geared to the circumstances of that particular consumer. And I think that's a great opportunity. Now, the consumer is still not interested in that risk, but advances in artificial intelligence and data analytics, combined with insights from consumer behavior, will make sure that to a large extent, is being done by computers. Now, the question is, to what point is it not standardized, and where will consumers need a human being to support them in those decisions? And to what extent will they allow, or will we allow, because we're still there in 2030, of course, will we allow the computers to make those decisions for us? I think that's a very important debate, and also regulatory debate.
Yes, actually, I don't know whether you've noticed, but George Orwell is again in the bookshops about Big Brother watching us, because I'll be wearing in 2030 a watch, which will be say, Carl, it's now time to have a glass of water. And I said, no, I want a glass of beer. And the watch will say, no, you won't get a beer. So we'll get fights with our computers. Well, would be quite entertaining. So if we look at this world beyond 2030, and we look at the insurance industry, what kind of people will be working in insurance? What kind of staff would you attract? What kind of people would you be looking for as different from today?
What is very interesting in the digital world, which would be the world of tomorrow, is to cut a long story short, it gives the powers, the authority to people who are the closest to the client. And that has been said previously by Madame Edixhoven. That is, the management gives direction, but then the implementation goes to the people, and the transformation is done by the young people who are digital natives, as you are, Carol, if I heard well, who have been born with Facebook, Instagram, and so on and so forth, and they are driving the transformation. And in the world of tomorrow, probably, people facing the client will have the authority to put the coverage that the client needs on a manner which will be absolutely adapted to the client. Today, we are pushing policies that are a bit generic. Tomorrow, a young business guy in front of the client will see, okay, what are your risks? What do you want to cover? Health, house, travels, and so on and so forth. And the policy will be adapted, hopefully in one policy and not in 10 policies as of today, to cover the risks that are needed. And so that means that we have to empower the people and to prepare them to the societies where they will have much more importance than they have today. And by the way, that is very interesting, because that means that today, people that we call operators, and it's not always the best jobs in our companies, will have probably more interesting jobs than the ones that we have as managers, or at least same type of interest.
That's would you agree with that, Dirk?
I would, and I would also, to your question, can they handle all this data? My word. For the baby boomer generation, the millennials are moving at warp speed. They will demand that information, and those that follow. 2030, maybe if we use that as, since that was the title given to this gathering, 2030, ironically, is the last year that the last of the baby boomer is officially tucked into retirement. 2030, just 13 years from now, if you look back, what has happened in 13 years? It was only 10 years ago that the iPhone was released. I think that what we have to pay attention to are the core values of this industry. I think perhaps when we talk about innovation and technology, Kodak or Uber. Kodak, when they had the opportunity to go digital, I think they misunderstood their core value. I think they believed that they were a film company with papers and chemical. They were not. They were a memory company. People want memories. That's what the Kodak moment used to mean. And so they're gone. The core value of our industry, I believe, is peace of mind, whether it's property and casualty, life, and also dignity all your life in retirement income and retirement security. So by combining these elements, and I think it's not unusual when you talk to someone, and certainly the young folks, they'll say, man, I just downloaded a terrific app. Look what it does. And often you'll see the next person immediately download the app. So they want the information. Yes, they can handle it.
Isn't it so, to move on to a little bit different topic, that in 2030 and beyond, prevention will be more a key issue than it is today, and how will that affect the industry? Maarten, can you say something about that?
Before I go to your question, if you allow me, as you know, I'm Dutch, and I was just thinking on what Dirk said. There is a saying that God created the world, but the Dutch created Holland, and that is because we made land out of water. We do that all the time.
It's quite scary sometimes to see that the water is higher than the ground.
It is. I live at -10, so I'm very aware of that. But a couple of weeks ago, we had 50. It's actually a Guinness Book of Record thing. It will be. We had 50 100+ citizens who don't have Alzheimer together, because we work with the Alzheimer Foundation in Almere. And Almere is a city that didn't exist because that was sea when those people were born. And so we had 50 of them at one place. And actually one of them was late because he was still working on his website. And he forgot the time, so maybe a bit of Alzheimer there, but he came to that place. And we had some very fascinating conversations with them, because also a lot of those elderly people were fully engaged in talking with their generations on WhatsApp and so on. I'm saying this because it's very hard to predict if we move on to 2030. I think, first of all, I would say that 80% of the jobs that we have right now in 2017 will not exist in 2030. Even if you graduate now from university, your knowledge is already not useful anymore, which you studied in the first year of your university. So that's going very, very fast. In terms of, and then going back to your question, I think this will have a huge impact on our industry and society. And one of the things we can do as an industry is indeed give that, I like that phrase, give peace of mind to people. And then out of data, more services are born. And one of those services can be, which is to prevent, what's also in the other discussion, to prevent risks more than to be there when the risk occurred. That will still be the case. But the whole prevention thing and being part of an ecosystem, platforms, where you can prevent risks from occurring, and if they occur, you're there and immediately, I think that's one of the great values of our industry to society in 2030.
Well, but if all risks are prevented, there is no need to insure risks anymore.
No, but that will not be possible. There
Is
will
not possible?
always be new and emerging risks.
As a Dutchman, will we have automated bikes also, like automated cars?
Well,
Quite interesting for you.
Yes.
Actually, I think I had a discussion with the mayor of Amsterdam. I live in Amsterdam on that, and everybody's biking there, and everybody does that without helmets. So
Yes.
over there, you would need the life insurance. But bikers are almost holy in the city of Amsterdam compared to car drivers. And you now have e-bikes, which drive 40, 50 kilometers
Exactly.
an hour. They are so fast. They're faster than some of the Vespas they invented in Italy. So yes, I think that will be the case, and it will maybe also be safer. But by 2030, we will see them. Yeah.
Yeah.
Carl, could I
Yeah,
add,
yes, please.
building upon this, when we think about we're headed toward a world of driverless cars, we're headed toward more and more of this technology. Can we handle information? I think what's going to come into far greater focus is the security of that. Because what happens, we just saw ransomware 2 weeks ago. 150 nations are affected. So I like to get a little more detail. In Britain, it affected 45 hospitals. You had real-life situations of people ready to undergo heart surgery, and it had to be canceled.
Yeah.
You had chemotherapy patients that were sent home without the treatment because they could not access the records. You had newborns born, and the nurses could not print the identification tags. One of the doctors said that the hospital's been crippled. We can't even do x-rays. So, and with this mountain of information that will be gathered in different sources, if people can infiltrate that. So as much as we realize technology can be a beautiful thing, we're going to have to continue to be vigilant and as innovative to guard the evildoers.
Yes. Obviously, I think Sergio Balbino already said in his opening statement that, this technological development brings opportunities, but risks, and cyber risk is no doubt a major risk. I was amazed reading some time ago that even insurance companies are not insured against cyber risk, which seems to be rather scary to know that. But let's start a little bit away from that risk, and I do fully agree with you that we need to find solutions for that. Whether that's possible is not a question. But if we go back to medical advances, how will this affect the life and health insurance sector, Eric?
I believe that that's one of the areas where the ethical issue is the most important.
Yeah.
And I think when we deal with that, it's more a question of ethics than of insurance. And maybe I'll give another example. You know, French people are very fond of credit insurance. In many countries, by the way, it's important when you take a mortgage to insure that. And the tradition was that for people, and I'm sorry to speak about cancer again, but it's a good example of an ethical question. When you had a cancer, you could not get credit insurance, meaning you could not buy a house, which of course is unfair and not appropriate. And so we had a working group, and by the way, that was an initiative jointly by the insurance industry in France and the former President of the Republic, and we decided to give a right to forgiveness. That is, after 10 years, whether people had a cancer or not, they had the same tariff on credit insurance. And that is now a regulation in France. And that, but that is, again, that has been built with industry. So I believe the industry has to build that kind of regulation, and when it is more difficult or sensitive than that, it is a political issue that probably has to be put in front of the people, and that is by the politicians and by the parliaments.
Would you think that this is something to be regulated, or do you believe the industry itself can take care of that?
I think the industry has to be conscious of it, and has to put self-regulation, which is working very well. But some things are so important for the society, and I come back to the example I gave of genomics. What can you do with the information on an individual? I think it goes beyond the industry. And that is something that has to be taken in front of the people to have a debate in the various countries, or for us at the European level, in order to find solutions and ethical ways to deal with that. Because the solution has to be shared. And in my view, for things like health insurance, it goes beyond the responsibility of the industry. But of course, the industry has to participate to that debate in a very responsible manner.
Yes. Is that how is it perceived in the US, Dirk? Because I think between Europe and the US, anything about data protection is considered differently. How do you see that evolving? Do you think that in the US people will become more conscious about the need to protect data than it is today?
Yes, because I think there will be more examples of the reality of what happened where someone didn't have that protection. I think also on your point about people living longer, genomic sequencing, whatever the case may be, but I once sat down with a group of college students and I said, what do you think about life insurance? And they just hadn't thought about it. They said, really, isn't that just death insurance? Mm-hmm. And I said, well, next week I'd like to sit down with you again, and would y'all just kind of think about this? The next week, I said, so what are your thoughts? They said, we really think it's death insurance. So the only way that anyone benefits is if someone dies. But they said, what if instead you incentivized us to live? What if instead, at the end of our 4 years in college, and we're still very alive and happy and healthy, that some of those proceeds you did not have to use could go to something we'd like, a cause. Lemonade, the new company that's out, that's what they're doing. And people, if they can feel incentivized and feel that I can live for something bigger than me, then that's a good thing. And the industry can be part of that.
Yeah. Let's move on to a different topic, which is peer-to-peer insurance, which is, I think, popping up in different ways. Is that the sort of a business model that you see growing as we move forward after 2030? Will they replace the traditional insurance industry? People just insure themselves?
Absolutely. We are also involved in a couple of peer-to-peer ventures and experiences out of our Transamerica Venture Fund. I think what is important is that if we look at our business, then it's like Anna was saying on the family business, it's transforming very rapidly, and you have to really think through where in the value chain is my added value. Is that in distribution? Is that in the service providing, administration, or is that in the underwriting or in the asset management area? And you have to make, from a strategic point of view, real choices for your different business line where your added value to society and then also to shareholders is. Now, with the peer-to-peer, what we see is actually it's a lot of fun cooperating with them. They're data-driven, they're techies, they have beards, they're different than most people in I give a compliment.
Excellent. Belgium beer, I hope.
Yeah.
This is good.
But they have a different attitude. And what they do, they say, okay, we don't have legacy. We have technology, we have great algorithms, and we're learning every day. And the difference with you guys is we're much faster. And second, we dare to fail. One of those companies we talked with said, if we don't fail with 40% of the things we put in the market, and we put them daily in the market, then we fail. Now, our product life cycles take 6 to 9 months, and maybe we are particularly slow there, but I think we see that in our industry. Their life cycles are days or weeks. So I think there's a great societal demand from people to share risks together, to help each other. At the other hand, they also need our industry because we have the licenses. And then at the end where the risks end up, you get to our industry. So I think there's a great opportunity to link up with those peer-to-peer platforms. You have to think through whether you want to be yourself. One, you can offer those. Because peer-to-peer will never be 100% peers at the one side and 100 peers at the other side. And we understand risk. So I think there's a great opportunity for us, and I think it will be much bigger because the new millennials like to share. It's a sharing economy. So they also like to share risks, which in the old days was maybe only our prerogative, and now others will do that as well, and technology and algorithms will bring them there. So I think it's both a threat and an opportunity, but it's also just fun to work with them. They're really a bit different.
Eric, would you agree with that?
Yes, but there are probably more technical difficulties in the peer-to-peer industry for insurance than in other industries. Actually, it's more a question for the reinsurers than for ourselves. Because when there is a frequency risk, that's easy for a startup to deal with it. But then when there is a large claim, coming back to motor insurance, because for the time being motor insurance is still an important business, at Generali France, one of the largest claims we've had is a double-digit number. And the first number is not a 1. So, so either you have a reinsurance company who can take the large claims, and then any startup can start in any business, or it's not the case, and then you need the large players. And that is why I believe, and that was what was shown in the previous roundtable, innovation comes largely from the brokerage side. Because actually to carry risks is a commodity, to carry risk. Sorry for our colleagues, but and we are here since a long time, and it's probably and the value there is a lot of value added, of course, but which is not new technologies, old technology. But to distribute risk, that can be disrupted, and then it gets to brokerage. And the most successful, you mentioned Lemonade or companies in the health sector, are disrupted in the distribution, in the way they package and distribute the products. And if we project ourselves, in my view, that will be more on that side than on the carrying of risk. That there will be innovation. I take a big risk saying that because maybe it's totally wrong, but I'll come back in 13 years to see.
Dirk, what do you think about peer-to-peer insurance going forwards?
Really,
would you share what
I think
Maarten was saying?
Lemonade is one of the
Yes.
examples of that. And again, in that situation, it's probably a more informed consumer. And so they're making an investment, which means they want a return on investment, which means I think they accept a greater responsibility to take care of themselves. It's almost as though they want to make sure that that group that they're now part of, that they'll all do fine, but that there'd be funds available for some cause that they may believe in. But I would also say this. I don't think it is going to be the transformation that is the industry of the future, because if there's one thing that is absolutely affirmed, and many of the companies are well over 100 years old, is they know how to manage risk. Yeah. Specific example, when General Motors, with their pension funds that they know is not in a positive cash flow, they turn to this industry. Prudential, for example, bought different packages of those pensions because the insurance industry knows how to spread risk. And I think that's one of the hallmarks. That's why it's a bedrock. People can rely upon that. The other thing I'd add too, Carl, that I think is very important, we talk about this and it's like industry, regulators, innovation, consumer. There is a role for regulation, because as much as we may say we are industry, we sit at a board of directors table, American Council of Life Insurers, but every one of those companies is in competition, because if one of the companies, for some reason, goes under, all of the others, through the guarantee association that we have, you cover. You don't want your competitor, because you have to fill the hole. Yeah. So there's an absolute role for regulation in this world, for industry, and it's just, I think we all have to have in mind the greater calling, which is so that people can have that peace of mind, and also those 65-year-olds and older in 2030, 50% of the 65-year-olds will also turn 85. Somebody's going to have to take care of them. And the more that this industry can be there to do so, the more people can be self-reliant and not government-reliant. And many governments are now beginning to realize that, because their social security programs are stretched very thin.
Yes. We'll have another panel talk about regulation. That's why I'm sort of shy away from that. But there's a question from the audience, which I wanted to ask anyway, is that if you look at the insurance value chain, I'll start with you, Maarten, and then we'll go around. Which part of the value chain would you consider to be the most disrupted if we move on to 2030 and beyond?
I had a conversation, I think, a couple of weeks ago with a Facebook executive, and I asked the question, why are you not much bigger in insurance and banking that you are right now? And he said, oh, that's very easy. You make lousy returns compared to what we can. And second, all those regulations is pretty complex. So actually, from a business perspective, our industry is maybe one of the least disrupted at the moment compared to other industries because of regulations. Regulations are saving our executives' jobs, is what one of my friends says, who is in another industry.
So is that a compliment to the regulators?
I think, well,
Somebody's smiling
it's
there.
an observation which actually was from an industry outside our own industry, which I think is very interesting. Now, if you and I think is fair to a large extent, because we discussed that this morning. It is complicated, and my view is it will become more complicated. Now, the same Facebook executive said that I'm going to address parts of your value chain. For example, they're moving into payments, and then they do that globally with 1.5 billion customers, not as a license holder, but partnering with somebody who delivers a payment service. And so I think if you look at our value chain, the service providing part, the administration mid-office part, that will be a part that will be hugely disrupted. Other players, including blockchain operators, can do that much more effective and efficient than we can. And I think what we discussed before, the distribution area, will see huge disruption, starting with retail customers, then moving to SME, and lastly the more complex risks because of more agility, faster moving, better understanding of the customer. I think we saw that in the other example of the other panel you had before. So I think those two areas, distribution as well as service providing. But having said that, in the other area, if you talk about 2030, it will also happen in other areas of the value chain. Think about asset management.
Eric.
If I were to name one, I would name the front end of the business. Because today the front end of the insurance industry is very complex. We have a huge number of distribution types, networks, brokers, agents, salaried workforce, partners, digital, direct, and so on and so forth. And we don't generally recognize the client. That is, you can have the same person having health insurance here, life insurance there, motor insurance through another channel, and there are very few companies who can recognize the client. And tomorrow that is already not acceptable because the people are used to have on their smartphone everything. And they will want to have all their covers on whatever device, by the way, of course, a smartphone, a tablet, and whatever. And that means that we have to rethink totally the interface, and this has huge consequences of the product offering. That means if every client has all the products on one device, that means you cannot one specific product by networks, because this will have to converge. The design has to converge as well. And so the driver of change will come really from the interface with the client, more of course in the retail industry than for corporate, because there it's already a bit more complex. But for the retail, that's where the disruption lies. And that will come also thanks to brokers, because there are online brokers who are already one step ahead in that type of presentation of the risk covered.
Okay, thank you. Dirk, there's a question from the audience specifically to you, and I want to ask because I think it's a very important question. What is the future of retirement saving, of life insurance, after 2030? Because people live longer, but they have to work longer, maybe until 95, or I don't know. When people are going to be 145, would be appropriate that they would at least work until 95. But how will people be at that age? I mean, I think in the US, you are more advanced in all types of insurance that take care of long-term care problems
Yes.
than that is in Europe, because what I see happening today, it may change after 2030, that once people get to the age 85, people have Alzheimer, dementia, and things like that. It's not an exciting life, and it's nice to have a life policy, but what can you do with a life policy? You know.
Right. I think we are migrating away from a world of inheritance. Because people are living longer, I think there will not be an estate left to the children. I think it will have to be utilized. All of the reverse mortgages. You know, for many people, your one piece of equity is your home, and now you get a reverse mortgage, and you've taken the value of that. With Alzheimer's, they will sell the properties, and they will have to. So we're leaving the era of inheritance. Maarten said about the millennials, what nice people they are. They're tremendous. Interestingly enough, apparently their number one source for advice that they go to are their parents. Their parents are going to say, do better than I did on my preparation for retirement, because we're all going to live longer. And the immediacy of it. One of the things I would say, too, with retirement security, governments are starting to recognize this. You've probably seen in the United States, Congress and the administration are talking about tax reform. The Senate Majority Leader, Senator Mitch McConnell, said to us recently, your best argument in any tax reform is do not damage the industry that is the solution to the pending retirement crisis. If anything, incentivize it. So we have this unique opportunity that this industry is positioned to be a solution to a burgeoning problem. And our products provide that. Even sitting in Beijing across from government officials, they said, if you think your Social Security is thin, you cannot even imagine ours, as our elders now are beginning to come into the city to be taken care of. They said, we need more financial instruments. So there's absolutely a role for this industry. And it's a role that's going to continue to grow. It will be needed now more than ever.
Yeah, but what can I do with money? You know, when I'm 85, I'm 90, you know, what can I do with money? What I want is an elderly home where I have a nurse taking care of me and things like that. What can I do with the money? The money will not be enough.
It may be, because we've left the world of defined benefits. People don't have pensions. But you can get your own personal pension through an annuity. And so you take those savings, or you do the reverse mortgage, and you take a portion of those funds, and you buy the annuity, and you have a paycheck for life. I took out, for Patricia and me, long-term care policy.
Very wise.
I told my adult children, someday you should take over the premiums. And they said, why would we do that? And I said, because that's your Declaration of Independence.
Absolutely.
Because if you don't, I'm moving in with you.
Very smart, my friend, very smart.
I'll do to your home what you did to ours.
They ask, can we pay right now?
Yes, where do we sign?
Maybe, if I may, because I think this is a very important topic, and we're publishing.
Yes, and unfortunately we will have to close. But
okay,
please, yes. No.
Very brief, because we're publishing actually next week a report with the OECD meeting on longevity in Paris. And one of the things we see in that research is that we will have 5 generations in the same workforce for the first time of humanity.
5 generations.
They will have to work together. That's a very important angle. The second one is we measure that in 16 countries. The retirement readiness index of the US on individuals is 7. In Europe, it's in average 6. I think next to the crisis as you described, we have an additional one in Europe, where people still are not realizing, as they start to do in the US, what the impact of longevity and retirement will be. And on a personal level, I work with a guy who's 86, who is still working and doing 30, 40 hours per week with a lot of jest. And I think what we will see is that this is one of the big, I would say, opportunities, but also reasons of existence of our industry. And I like your argument a lot also towards policymakers. Let's therefore also protect this industry because we are part of the answer. But in Europe we have 2 crises, and I would say in the US we probably have 1.
Okay,
there.
well, gentlemen,
Who's the lady?
to conclude, well, there's many ladies in the audience, but to conclude maybe our panel, I think we learned a lot about the fact that we should see technological change not as a threat, but it's an opportunity. Yes. Peace of mind is very important. I think if the insurance industry can contribute to deliver peace of mind to people so that they know they'll be taken care of if risks would materialize, because they won't anymore, they will be prevented. And if they happen, they will get the appropriate products to take care of them. I think that's very good. So, ladies and gentlemen, join me in thanking the panelists for their contributions.